Okay, so I'm going to share with you the number one reason. It is the number one reason why many stock market investors don't make money, or at least don't make money long term. And it's not what you think. Okay, the reality is that playing in the stock market is basically a win or lose game. And what I mean by that is when you buy a stock, you're making a decision, or you're making an expectation. You have an expectation that stock's going to go up, right? You're buying it for the price today because you're assuming it'll be worth more tomorrow. So who's selling you that stock? The person selling you that stock, their mindset is that it's going to be worth less tomorrow. Because why would they sell you the stock for this price unless they thought that it was going to be worth less the next day or the next week or whatever, right? So you're betting against somebody else. One of you will be right and one of you will be wrong, okay? So why do so many stock investors lose money? It's because their bets aren't necessarily wrong or right, but their time frame is the issue. Your number one secret of success in the stock market is patience. Warren Buffett said that the stock market is really a mechanism for transferring wealth from the impatient to the patient. In other words, if you're willing to wait, you're likely to make more money than the person that is not. And I can tell you from personal experience, I put so much money in a stock once, and I was watching it drop every day, and I was like, oh no, I'm going to lose all my money. But you know what? I sat on it and waited, and although it went down, it came back up. Now, it took like 3 months, and that was a painful 3 months, I can tell you. I was stressed. I was watching it going, oh my goodness, you know, is this thing ever going to recover? And then even when it was recovering, I was like, do I just sell and just maybe take less of a loss? Watch it come back up. You know, will it ever reach back? Sometimes it would touch close to what I paid to it and then come back down and then go back up. My point is, by the end of it, now it's worth more than even I paid for it. But here's the thing. Patience is the key. And here is the biggest challenge for people. And I promise you, this is a challenge for me as well. Even though I've been doing it for a while, it's a challenge for me. And that's to not be too greedy. That's to not invest so much in a stock that you end up in a bad position where now you feel forced to sell. So remember two things. Number one is patience, and two is diversification, right? Put your money across multiple stocks, multiple assets, so that if one goes down, it's not everything. You don't put your eggs all in one basket, because if you drop the basket, now you have no more eggs. And if you have multiple investments, you know, some of them will go up, some of them will go down, but you have the ability now to play that game of time where, okay, these ones went up, maybe I can sell them and then I'll wait for these ones. Maybe I'll buy something else. You put everything in one and that one drops. Now you start to panic, and it's just human nature. So just remember, patience is really that mechanism of getting you through the highs and the lows so that you can get to a place where you can make money. And unfortunately, most people make a short-term decision. They're hoping that as soon as they buy the stock, it's going to go up. But you know what? Here's a secret. The stock doesn't know that you own it. The stock doesn't know that you've bought it and you're expecting it to go to a certain price, right? It sounds funny. People are like, well, I bought it at 10, so it's got to go to 12. Why? Why can't it go to 8? The same way that you thought it would go to 12, someone else that sold it to you at 10 thinks it might go to 8. That's the reason they sold it to you at 10, right? They'd be crazy to sell it to you for less than what they think it's worth. My point is this, maybe it's worth 12 in the long term, maybe it's worth 15, but it may have to go to 8 to 7 to 6 before it comes back up. And are you willing to wait? What was your mindset in the process? If your mindset was, I'm going to buy it and sell it straight away, now you're going to miss out on those gains, or more likely, you're going to sell it for a loss. And you know, every single person, if you talk to them, right, everyone knows you buy low and you sell high. But what happens? Most people buy high and sell low. Why? Because when it's low, nobody's buying, right? As I'm recording this video, and whenever you're watching it may be different, but as I'm recording this video, the technology stocks have taken a massive beating. A lot of companies have really sold off heavily, and their stock prices are quite low. You know, not ridiculously low, but they've lost a lot in the last couple of weeks. And guess what? The volumes on those stocks are very low because nobody's buying them, because they're worried. They're afraid of the future. But because they're worried, nothing's happening with those stocks. They're buying other stocks right now. What do you think is going to happen over time? Now, I don't know when. It could be next week, next month, next year. But what's going to happen is people are going to come out of those other stocks and come back into these ones. And once the herd comes back in, the smart people are buying now when nobody wants those stocks. And then as other people start to buy, here's what people do. They'll say, oh, it's rising. And as they're rising, that's when people start to get in. But the people that bought here, guess what they're going to do? They're going to start selling, right? And that's how the money's made. They buy when nobody wants it, and they sell it when everybody wants it, right? They sell when everybody wants it and wait for it to go back down. And then they buy again. And most stocks, of course, there's stocks that are going to go bankrupt, so you don't want to buy those companies. But if you're buying a good, solid company with a solid track record, good cash, good brand, the short-term fluctuations are really an advantage to you because you can buy at a lower price and sell when the market is frothy and looking to pay anything to get in. And most people don't understand this. They understand it from a mental point of view, from a logical point of view, but when you're in it, it is very difficult to see that upside because you've bought this thing expecting it to go up and it goes down. And you go, I'll be okay. We'll give it another week. And then it keeps dropping. And then you give it another week. And now I'm like, oh my goodness, it's so far down. But you know what? In 6 months' time, it might be up here. But you've had to go through that valley, right? The valley of the shadow of death, right? Stock death, before you can get back up. But because of that process and because you weren't equipped and you weren't thinking of it, you're going to end up selling here. And eventually, what's going to happen? Some people are going to buy it here. And then once you see it come back up, you're going to be like, now I've got to buy again because it's coming back up. And you'll buy again. But see, if you would have held it, you wouldn't have lost anything along the way, assuming you bought a solid company. So again, position sizing, diversification, risk management, these things are super important, especially for new investors, because honestly, it's the emotions that kill you, not necessarily the company that you buy. And patience, again, is the mechanism of transferring money in the stock market. If you're patient over time, you generally will make money. But most people don't set themselves up for patience because they have a short-term perspective when they buy. And if the market goes against them, then they make a short-term decision. And really, that's about how you come into the trade, not just what you do once you're there. So I hope this helps you. See you next time.